All right, I've got a few lines here. See if you can figure out who we're talking about. Sarah Smiles, Man-Eater, I Can't Go For That, Private Eyes. Does that ring a bell? They're actually song titles from a group. And why would I mention it? I'll tell you more in a moment. First off, let's talk corn. And corn here still in the red. We're down 6 1/4, 466 1/4, and we're trading at the bottom end of a 9-cent trade range. Now to the bean market. We had another flash sale to China reported this morning, 4.9 million bushels. Now yesterday, nearly 18 million bushels to China, another 5 million to unknown destinations. Rewind to last week, we had 25 million to China and unknown destinations. We're over 50 million bushels of soybeans sold here in the last, seven days, or at least reported here in the last 7 days. November down 18 3/4, 1173.5. If the market is taking this into account, it shrugged it off. Is it baked into the cake already? That's a possibility. Here's soy meal. Those contracts are lower across the board. And bean oil moving lower as well. Now to the wheat market. And we're watching front month here, September, down 14 at 637. Hard red is down 12 3/4, 704.5. It's trading in a 22-cent trade range. And the cotton market as well in the red, 81.65. That's down 92. You know, our guest in here today is Chris Swift, and Chris is with Swift Trading. And really, I can't quite get a handle on how the market is going to react to the fundamental news. But you would think this is positive, more sales going to China.
Yeah, you would think so. These markets are an exercise in futility. I'm telling you, everything that we do, if we say it's red, it turns black. If we say it's green, it goes red. All of these various things are just really volatile. And not real sure what to look at it from standpoint. Last week I stated I was very bullish the market. I still am. I see a lot of things that really should make the market go up in price, but yet there's an underlying factor there. We still got to move this corn, and we don't have a high enough price yet that really entices a lot of selling, and we can't really get quite low enough to entice a little bit of buying, and so now we contract into this range, and I'm kind of fearful that's where we may wind out for the rest of the year. It's just range trading.
And we do have a WASDE report. That's a World Ag Supply Demand Estimate report. We just use the acronym, obviously. It's fewer words here. But we get a WASDE next Wednesday. Is that something we need to keep an eye on?
Well, it always is, because it gives us a record of what we've got on hand. But projecting forward, I'm not real sure where the next demand set is going to come from. Our livestock seems to be very stabilized out there. Our ethanol production, as well as soybean oil production for the biodiesel fuels, now that we're kind of losing a little bit of that energy component out there, those have been a little bit weak as well.
You know, I looked at production of crude here in the U.S. and production. We're knocking it out of the park, but we're also starting to see some pressure work in on exports as well. Speaking of crude, here's where we're trading right now. We're at $76, which is down $4.30. And you talk about volatility in a marketplace. This WTI, in less than 5 days, we've gone from 96 or at least 90 back down to below 76.
Well, it's been horrendous, and especially in the diesel fuel market. And we were talking off air a little bit. We leave Friday afternoon on a 10-15 cent rally right at the last 5 minutes, and then open 15-20 cents lower on Sunday night. The enormous amount of price fluctuation keeps everybody on guard.
And we're watching Brent crude. That's what we're talking more globally at that point. We've got gasoline futures moving lower for the 4th straight session. Nat gas, we're lower. And then we work over to the distillates here. And diesel, ultra low sulfur diesel, ULSD, is trading lower for the 4th session as well. All right, we're talking with Chris Swift, and we're back in a moment. We're talking livestock after the break on Market Day Report. How about we look at livestock, and in particular, let's talk cattle for a moment. We call these live cattle, and maybe our guests can tell us about the transition from fat cattle. How often do you hear the term fat cattle? Live cattle, what's the difference? Maybe we can find out in just a moment. Front month here on August, 230.62. It's down 47. We're 47 lower on October at 226.25. Now, the October is the most active, but August will expire at the end of the month. Same story here with feeders. August front month, it expires this month at 347.50, which is where we're trading. It's down 32, but September is the most active. It's unchanged at 342.55. Let's swing over and check out hogs. We're trending lower again. The August is up a nickel, but the deferred contracts are lower, and that's really been the trend for quite some time. So our guest is Chris Swift, Swift Trading. I'm throwing that one at you. I didn't give you any warning. But how often do we say fat cattle? And somebody might be going, what are they talking about? I've never seen fat cattle on the board.
Well, and it is just an expression because they are fed. A lot of people call them fed cattle, but fat cattle. But we're the only country that feeds cattle. Most of them are all grass pastured cattle. So that's the only thing too, is they're just fattened up. So they call them fat cattle.
Yeah. So when you see live cattle and you hear us say fat or fed, now, fed different than feeder cattle.
Oh, sure, absolutely. The feeder cattle are ready to go on feed. They've been backgrounded and ready to go on feed. And we saw some of the prices there just a few minutes ago. And basis has been the most important factor that we have seen in the feeder cattle market, and it has recently narrowed by close to $7 to $8. It got out close to $30-something. Then we're down to 23, and I think some of them are now as narrow, depending upon which contract month you look at. They're as narrow as probably 10 to 8. So whenever that basis narrows now, and we believe that we're in a transitioning market, we're transitioning from all the bullish fundamental factors of lower beef production, lower cattle production, to an increased demand, to something that we've got to go into now where we have increased the beef production. We are most likely going to increase cattle production, and so we go through this transition.
All right. Let me put you on the spot again.
Right,
as you were driving in, I think you probably heard a song.
I did. Sarah Smile.
Sarah Smile was by a group called Hall & Oates,
yeah.
right? Okay, I stumbled on something earlier today from Bill Sullivan Jr. It's on LinkedIn. But he's done some research here. The group Hall & Oates, Daryl Hall and John Oates, officially broke up back in 2023, and it was over finances. Oates wanted to sell his 50% off. Hall didn't want to give up control to somebody else, and so they took it to court, and they're still business partners 50-50, but they're not a group anymore. And Bill Sullivan said, since they broke up in 2023, what's happened? Other bands have started breaking up. Those have been increasing. Violent crime in the U.S. has gone up. Fertility rates are going down. Reading levels have gone down. And the probability of an asteroid hitting the U.S. has increased because the group Hall & Oates are no longer together.
Then I have to say, you two together doing your market reactions, that's a better duo than Hall & Oates. I'll make that assumption right now. I'll make that statement. Thank you both.